It's a good time to evaluate whether your situation has changed. Have you gotten a new job? Has your spouse gotten a new job? Have you gotten married or divorced? All those things are going to impact your taxes.
Hello, welcome back to Making Money Manageable with Alan Dembski and Juliana Janson from Buffalo First Wealth Management. Today, we thought it would be a good time to talk about some mid year tax planning strategies. People come to us throughout the year, mainly when they're ready to do their taxes, about some of the things that they could have done the year before. So, thus, we're making a video to help people tackle that issue as we approach the 6 month mark here.
Yeah, and I think, first of all, we don't think there's ever a bad time to talk about taxes. It's really important, and the more you plan ahead, the better it is. So, one of the things that's not really directly related to tax strategy per se, but is really important is setting up your IRS.gov account. Full disclosure, I finally set mine up about 2 months ago. It had been on my to-do list for quite some time, and it's not super easy to do. You have to make sure your logins work, but it's definitely something that will give you a little bit of peace of mind because you don't want someone, not you, setting up your account with their email. So the first thing is it's one more thing you can do to protect against fraud. And also having the account is something that gives you a little bit more flexibility and ease with which to make payments to the IRS. And also you're able to access some historical information about your return. So it's a good thing to do and something that's nice to do when you're not really under the gun for getting your taxes done. So this is a great time to do it if you have not done it already.
For sure. And now that we're, in the middle of summer here, you can also use the free calculator at the IRS.gov. It's their W-4 calculator. So you could put in your gross income, all your deductions, and see how much you paid into federal taxes. And it'll also give you an estimate of what the projection will be based on how many more times throughout the year you get paid. So it's a really great calculator to understand, hey, am I going to owe money or am I going to get a refund? Are they withholding enough? Do I have to change my W-4 at my employer to make sure that all those changes are rectified? Or do I have to add an extra withholding to my paycheck?
Yeah, and also it's a good time to evaluate whether your situation has changed. Have you gotten a new job? Has your spouse gotten a new job? Have you gotten married or divorced? All those things are going to impact your taxes, and better to know about what the impact will be when you still have some time to adjust your withholding appropriately. We've still got some runway here versus waiting until November or December where you don't really have as many options available to you.
For sure. And some of the things that you can do to adjust that is one, you can redo your W-4, add withholdings. Those are the two easiest ways. But some of the things that people don't necessarily realize that they could do is increase their 401k if that's an option at your employer. Some employers do it quarterly, some are per pay period. So increasing your 401k contribution will actually lower your taxable income. Yes, you probably will take home a little bit less, but you're accomplishing two things. You're not paying as much in taxes and you're saving more money for retirement, which is a win-win. If you have an opportunity to do an HSA and you haven't been doing a health savings account, that might be an opportunity to lower your federal income tax. Generally, anything pre-tax that's coming out of your paycheck, health insurance is usually one. You can make an impact on that year-end total by adjusting a few things that are pre-tax as well.
And another thing that you can look at is whether or not it's appropriate to do Roth conversions. By now, you have a pretty good idea. A lot of people have received their annual bonuses if they get bonuses. So you have a pretty good idea of what your income is going to be for the year, and it'll allow you to make good decisions around whether or not this year is the right year for you to do a Roth conversion. And while you're looking at all of these things, really your general record keeping, this is a great opportunity to really go back to the beginning of the year and find out what donations have I made. The donation rules have changed a little, so people that may not have been able to take a charitable donation deduction are able to this year. So it's a great opportunity before a whole year has gone by to look to see what donations you've made. If you have a business, gather your business expenses together before you have to look at a whole year's worth of information.
Right. And I think the other thing that, you're talking about some of the tax law changes. One of the things that just popped into my head is some people may have had overtime last year or some tip income. It may or not be the same, so you could be losing a deduction there as well. So things happen throughout the year that you really got to pay attention to and understand. If my situation is not the same as the previous year, I might really have to rethink where I might stand at the end of the year and seek professional guidance. There's a difference between tax preparation and tax planning. Generally, when you go and give your documents to your tax preparer, you're handing it to them. They ask you a few questions, they enter all your information, you get money back or you owe, and you're done. You generally don't have a tax checkup throughout the year, where tax planning accomplishes the throughout the whole year, not just once a year, and also helps project not only the remainder of this year, but also going a few years out as well. So there's definitely a difference between the two, and seeking guidance can certainly help with that. And also, does your if you have investments, does your investment advisor talk to you about taxes? We find a lot of people don't get that information from their advisor, and talking about capital gains throughout the year, or dividends, the difference between qualified and non-qualified dividends, interest, how that's going to affect your bottom line at the end of the year. So there's a lot of things that happen throughout the year, not just once a year.
Yeah, and I also like to reach out to my tax preparer when it's not their busy time. As soon as the calendar turns over to January, they're super busy because they're against the clock in terms of getting those out by April 15th. So I like to take this opportunity to do some modeling for myself personally, and we encourage it for our clients too. So you're not approaching these poor tax preparers when they're at their super busiest.
Yeah, and I'll just tell a quick story if I may. I just had a call with a client, and he uses a national tax preparing firm that is not open in non-tax season, and we're trying to do some Roth conversion. And the state that he lives in has some different rules for townships, and in New York we have the star rebates for tax credits. And unfortunately, he couldn't call anyone to find out the exact rules, so we had to dig deep into research and finding that state's particular guidance on income and qualifications for tax credits. So there's something to be said, sometimes having somebody there all year around rather than just once a year to prepare my taxes.
Agree, definitely. We're always interested in what your comments and tips are, so please leave us a comment. Also, if you could like and subscribe to our channel, we would be very grateful. And stay tuned.